Hello, this is Patrick White from AA Commodities and Investments from Spencer, Iowa with your weekly market recap. It's May 19th, 2019. It's Sunday night here. As you can see, we've got pretty good markets here to start the week. We got July corn up 5 3/4 at 388 3/4. We got Dees up 4 3/4 at 403 even. We got July soybeans up 10 1/2 here at 832 1/4. We got November up 10 1/4 at 857 1/2. I'll go ahead and start her off with a disclaimer here. Just remember that everything I say here is just my opinion and there's no direct trade recommendations. If you would like to read the full disclaimer, please pause the video now. So let's go ahead and jump into the charts here. I'm just going to cover corn and soybeans here tonight. I had a pretty good open here. We had a gap up open. Gapped up. This blue line here is the 200 period moving average, so we can take a look at that. So yeah, like I said here, 386 1/2, 386 3/4 was the 200 period moving average. We jumped ahead of that. We ended up getting our trend breakout here in the corn market between Friday and tonight. I think that we're going to see some good resistance here up at the 390 level, and this is in July 19 corn. And if you take a look past 390, the next area would be 395 and then $4. So that $4 mark nearby is going to be a huge area. And if you'll notice too, if you look back here just a little bit further, this $4 level is the level that we've touched, multiple times here and struggled to get through. So, in October, November, December. So we're right back there. So yeah, the $4 mark, looks like a good interim target here for the July chart. We can take a look at the December 19 chart here as well. We did get above the $4 mark here on the overnight. We dusted it on Friday. I would look for 405. That's going to be a big area. And then past that would be 411. I know a lot of guys, they have their, the majority of their corn orders between 420 and 411. So yeah, just seeing the still continued short covering. Why is that? Well, we've still got a weather market. This thing's going to continue to short cover until the perceived threat of weather is gone. Who knows how long that'll be. But over the weekend here, we did have some, pretty good sized rain. This is the past 72-hour precip right here, this chart. And so, yeah, just looking at it in the past here, Iowa has gotten about 2 to 3 inches or so. Southeast Iowa got the most. And then, you look at like the middle of Illinois too. They got about 2 inches. Southern Illinois, they got about a ½ inch too. So the trade's really just doing a good job of pricing in, their perceived damage of the corn yield from over the weekend. So, and then here's the precip forecast for the next week. So from May 20th to May 27th, we're supposed to see a bunch of precip in the southwestern corn belt. And the eastern corn belt too. They're supposed to get some decent sized rains, but the heaviest over the next week is supposed to be in eastern Kansas there. But there's still a lot of rain to keep a lot of guys out of the field. And last week we were only 30% planted versus a 66% average. This week the planting progress, the crop progress report is going to be huge for the corn market. Just to see, what that, how large of an area is going to be affected by this late planting. I know that basically since May 15th, the ideal window to plant corn is, gone. So it's just a question of how much damage is there right now. I think somewhere between 3 and 5 million acres of prevent plant is attainable. I guess Nebraska, they've got the first prevent plant date in corn coming up on the 25th. So we'll see what happens there. So that's kind of my analysis on the corn market here. And one thing you might want to take a look at, that I've been taking a look at is options. If you're, you want to market corn in this rally and, you don't want to give away what we've gained here in the last, week or so. We've gained about 40 cents. If you don't want to give any of that up, but you still want to market at a higher price, maybe 389 July corn's not doing it for you and you want to wait for a higher price. Well, why, take the full-on brunt of that risk there? There is a way to mitigate that risk, and that's by buying a put option. Just as an example, you've got the 380 put here. You could pay 10 1/2 cents for that. And as the market rallies, those puts will get cheaper. But then, the risk that the market goes back down is also greater here. So, yeah, one thing you might want to take a look at, just the nearby, close-in options. Just if you're nervous, if you want to wait to market, and you don't want to give away the rally, this will make sure that you don't do that. So, you can buy the 380 puts on however many bushels you want to market here, and that'll give you just a floor of 370. Or say you want to buy a 370 put, that'll give you a floor of 363.5. So something you can call me up and talk to me about there. So yeah, still seeing a nice weather rally here. And we are getting close to an advantage alert. If we end up closing positive here tomorrow, there'll be an advantage alert going out after the close. So that's another thing too. So be on the lookout for that. It's been a while since we've had one of these, so I'll be sending out the robotic phone call here to you guys. So yeah, that's about all I got here. If you guys have any questions on this rally, or you want to get some price protection in, let me know. 712-262-7606. Yeah, hope you guys dodge the rain and get a lot done this week. Sounds good. Thanks.